Wells Fargo recently announced it's stepping back from the mortgage space. The former number one lender will be leaving a void, but its decision is made in the landscape of plunging mortgage demand, higher interest rates, and low affordability. Nadia Evangelou is with me to talk about how these factors affect the housing market and those looking to buy and sell. Nadia is a senior economist and director of forecasting at the National Association of Realtors. Nadia, thanks for being with me today.
Good morning, Simone, and thank you for having me here today.
Wells Fargo is one of the top lenders in the country, and mortgage lending is a multi-trillion-dollar industry. Do you think that their step back is going to be pushing customers to non-bank lenders like Rocket Mortgage? And how is that going to affect people looking to secure a loan?
Yes, indeed. Wells Fargo recently announced the decision to move back on mortgages, and this will have an effect on home buyers. I think for the short run, until other lenders will step in. This actually reminds me when Bank of America, for example, and JP Morgan did the same after the 2008 housing downturn, and then Rocket Mortgage, previously Quicken Loans, came to the market offering mortgages, and now it's the top residential mortgage lender. So for other lenders, this move this could mean less competition for them, but for home buyers it could mean fewer options. But I think this will affect only for the short run.
Let's move on to housing affordability. For several months, actually 6 out of the last 7, a family with a median income has not been able to afford the median priced home. What do you see happening with housing affordability? And more importantly, where is it heading?
Of course, housing affordability hit record lows in 2022. Owning a home became 60% more expensive compared to the previous year, forcing many buyers out of the market. Mortgage rates may have dropped to near 6%, and this is very welcoming. This is what we want to see. But for example, first-time home buyers still earn $30,000 less than the income needed to purchase the starter home. As a result, less than about 20% of the renters can currently afford to buy the starter home. In addition, what we see also is that there are significant housing affordability inequalities among income groups, especially for middle-income buyers. So in a balanced market, for example, middle-income buyers should be able to afford to buy half of the homes listed for sale. However, these buyers can currently afford to buy only 20% of all available listings. Thus, home ownership rate may continue to fall in 2023 as the share of first-time home buyers will likely shrink even further from the 2022's all-time lows. Housing affordability is definitely going to be the main driver of the housing market for 2023.
With demand for housing really dropping because people simply can't afford it, you would think that you would start to see more of a depression in housing prices. That's not really something we're seeing to a great extent. Do you think that housing prices are going to come down in 2023?
So in 2023, price gains will decelerate even further, but we don't expect prices to fall. Actually, we expect to keep an annual appreciation flat throughout the 2023, with half of the areas across the country to experience small price gains, and the other half areas seeing some small price declines. Generally, higher higher mortgage rates make prices to cool. However, home prices are still higher than a year ago. Even though significantly fewer buyers in the market, demand continues to outpace housing supply.
Why is the supply so low then? Because it seems like this would be bucking the supply-demand trend that you would normally see. Low demand, prices would go down. What's happening with demand here? Why aren't there more available homes?
Yeah, we expect actually in 2023 inventory to remain tight, with fewer new homes to start construction, and this is what we see, and probably fewer existing homes to be listed in 2023 due to the lock-in effect. Housing inventory we expect to remain limited next, this year in 2023, and probably in 2024 as well. So due to persistent building material bottleneck, the number of housing starts will continue to be below the historical average of the 1.5 million homes that we want to have. And actually, single-family construction will be most impacted, and this is the type of the home that home buyers usually, it's the most popular type of houses that home buyers want to purchase. And while 2022 was the first year with a decline of single family starts since 2011, single family construction is forecasted to experience additional declines in 2023. Meanwhile, as I mentioned, due to the lock-in effect, fewer homeowners are expected to sell their homes and purchase another as mortgage rates are substantially higher than in 2021. And typically, higher mortgage rates lead to lower mobility rates over time. Nevertheless, it's very interesting to see that the number of homes under construction is at record highs, especially for apartment buildings. So that's the completion of these homes may help with the price and rent increases that we have.
Are you looking forward into 2024 at all? And if so, what are you seeing there?
So for 2024, we expect housing market to rebound. So 2023, this year will be a turning point, for a turning year for the housing market, and then in 2020, we expect to rebound with price gains at normal level about 5%, and existing home sales to rebound with about 10% gains when we compare it with the 2023. So better to come.
Well, so good news for people who want to sell their homes, but maybe not so much for people who want to enter the market. Nadia Evangelou, Senior Economist and Director of Forecasting at National Association of Realtors, really appreciate your insights today.
Thank you, Simone. Bye-bye.